Now that we have covered free margin and margin call, it's time to look at stop out. Stop out is the level at which the broker starts closing the least profitable open positions in order to free up margin at Britt.
You can see at which point stop out will be initiated for each trading account in the Trading Accounts Overview section.
As you can see in this example, a stop out level is 20%, while the margin call is at 40%. What does this mean exactly? In this case, once the trader reaches 40% of the margin level, he will receive a margin call if the trader doesn't start closing the least profitable positions and experiences further losses that bring him to 20% of his used margin. Stop out will be triggered.
The broker automatically closes the least profitable positions to free up margin and protect the trading account.
So now you know what stop out is. Here's hoping you never have to experience it. Till next time.
Please like and subscribe.